let's start off with the overall market performance into today's session. Tell us what the biggest factors were today.
Good afternoon, Eleni. Today the market continued a bearish performance. We saw a slight decline in the all-share index again today, and activities were largely dominated by the banking sector as we continue to see investors take position ahead of the earnings season that is around the corner. The stock with the highest trade today was actually UBA, that had significant trades of over 300 million units, also continuing the rally that we have seen over the last 3 days on that stock.
With regard to the 2012 budget, that also being announced by the minister as well, major cuts expected with regard to subsidy payments. How is this going to unfold, and how do you think this is going to impact the overall economy and sentiment? Do you think it's largely been priced in?
I don't think he was priced in prior to yesterday, but I think that if the information is a positive development, you will recall that one of the key yearning of the citizens was that the government should first try its spiel of financial restructuring on itself before implementing it on the people, which was supposed to be in terms of having significant contraction in the budget as well as restructuring in government finances in the area of overhead. And I think it's in response to that yearning that we have seen this restructuring of the budget, where the budget has now been reduced from 4.75 trillion to 4.65 trillion for 2012. There were some increases in revenue as well as significant reduction in government expenses in the area of administration, training, as well as transportation costs. So I think the development is a positive development for the market. We're seeing a savings in the budget of about 100 billion naira, which would also help to better manage the government's fiscal deficit as well as reducing domestic borrowing. So I think it's a positive development for the market, and we expect the market to respond positively to it over the medium term.